Next, we will have a panel which will consider the extent to which the insurance sector is meeting the needs of consumers. This is a part of the IAIS's expanding focus on consumer issues. With that, I'd like to hand over now to Commissioner Mays.
Good morning, everyone. Thank you for being here this morning. I'm pleased to be joined by a great panel. I know I can see we've got 2 people in-house, and we've got 2 people that are virtual. We will introduce them shortly. But before I begin, I would be remiss not to take this opportunity to thank the outgoing, or the chair of the executive committee of the IAIS, Vicky Sporta, for her leadership over the past 8 years. Having been on both sides, been on the industry side, been here as a regulator, I can tell you I've watched the work that she has done. She has led with talent, with skill, with determination, led this organization through some of the thorniest issues it could face. I just want to thank you, Vicki, and I look forward to working with you, Shigeru, as we go forward on this great journey. Now, that being said, let me just say we have less than an hour to address an issue that could take us all day. So for our panelists, you're going to find their biographies on the website, on the conference website. We're not going to go into that right now, but I'm going to start off by saying a quick welcome. Let's start with those on stage. To my immediate left is Shimichi Kishi, and I'm hoping, apologize in advance because I'm not good with names, especially pronouncing them. Mark White, did I get that one right?
Absolutely, Andrew.
And on the screen, joining us virtually, Karen Cox and Andrani Thresingham. See, I really tried with that one, Andrani. But thanks to the diversity of this group, we can explore our panel discussion from each of the supervisor, industry, and consumer perspective. And we expect today to benefit from these different perspectives, these different experiences from different parts of the world, and importantly so. Because now, with this panel, we turn our focus, we turn our attention to consumers, and we're considering how to embed consumer-centric outcomes in the insurance sector. You know, what is it all about? What do we do in this industry, in this sector, if we are not focusing on meeting the needs and the expectations of the consumers who buy our product and who need our product? You know, through this panel, we're going to be exploring whether the insurance sector is meeting the true needs of consumers. We will consider, for instance, aging populations. I think that's certainly a concern that we in the United States share with people in Japan. The increasing use of technology, worldwide concern, and various other societal insights. I will invite panelists to share their insights, again, that diversity of insights, on how insurance can better serve diverse populations, how insurance can be effectively and appropriately explained to consumers. And what are the opportunities for insurance to innovate and prioritize the consumer at every stage of the life cycle? So, to help set the scene, the person whose name is easiest to pronounce for me, on the far left, I'm going to go with you, Mark. And Mark serves as the chair of the IAIS's Market Conduct Working Group. Mark, can you tell us a little bit more about what you're doing there at the Market Conduct Group?
Yeah, thanks, Andrew. You know, you said it so well when you talked about insurance exists to serve society. Consumers are at the heart, and that's why we're all here, why we have jobs, whether as insurers, stakeholders, or regulators. And one of the great things in my career is getting the opportunity to lead the Market Conduct Working Group, because it's supervisors focusing on the fair treatment of consumers. For you who are techie, that's ICP 19. And that's all about thinking about meeting their needs. And we do this through three ways, the way I think about it. The first is we spend our time looking at what's going on in the marketplace. We try and understand the developments that are going on, and we think about the consumer perspectives in those marketplaces, so we can basically think about how are they affected And we also think about how do we engage to make sure we're hearing those consumer voices. The second thing we do is we share supervisory approaches. We talk about the issues we all come across, and the amount of commonality that exists between the marketplaces, and we're a global group, is truly amazing. We recently put out a supervisor-only paper basically about market conduct indicators and how we're using data and analytics. At a recent meeting, we shared RegTech, or supervisory technology. We heard about how people are using AI to improve their sales agent licensing processes, and another supervisor using essentially a machine learning technique to troll the marketplace to look for advertising which is inappropriate for insurance products. And the third thing we do is about guiding supervisors, but also insurers and intermediaries on how they can better achieve the fair conduct. This includes our DEI, our diversity, equity, inclusion-oriented work about achieving fair outcomes for diverse consumers. And in addition to what we do on the Market Conduct Working Group, the IAIS and this conference actually reflects the diversity of consumer issues that are going on. So we try and also support those, whether it's the climate risk conduct issues, the natural catastrophe protection gaps, financial inclusion, or looking at AI and ML from a fintech and consumer perspective around data, privacy, and accessibility. Finally, the IAIS, and I've been involved with it on and off my career for quite a while, but I'm very pleased how it is now focusing on a very holistic perspective of insurance supervision. And they're thinking about not only the prudential and those important capital and liquidity and asset issues, but they're looking at conduct. And they're also seeing conduct increasingly as an end in itself. Conduct's not just important because insurers do get into financial problems when they don't think about the consumers and conduct issues, but it's because insurers have that obligation, a public license to serve the public and meet those needs. And we're seeing that in the discussions we're having throughout the conference today, and I'm sure that that theme is going to continue on as we look at the next IAIS strategic plan.
Thank you, Mark, and that leads us nicely into our first round of questions, and I'm going to ask that the slide L be brought up. We're going to start off by looking at emerging risks for consumers. If you go to slido.com, you will see the keyword that will get you on there, so you can answer these questions. This is the audience participation segment, and we'd love to hear at what point of the insurance product cycle is there the greatest risk to good consumer outcomes. So please go to Slido, do that, and we'll get the answers later within this segment. But first, or while we do that, let me turn to our panelists. And Indrani, you're on the stage furthest from me on the screen, so I'm going to start off with you. But while Indrani speaks, I'd like everybody else to consider it, because it's a question that I would love to have an answer from each person on. What do you see as the most significant emerging risks for consumers in the sector, in the insurance sector? How should insurers and supervisors look to both sides? How should they look to address those risks? And how should we measure good consumer outcomes? Indrani?
Yes, thank you, Andrew. And for me, actually, I think coming from the consumer movement in Malaysia, for us, the main point is actually during the claims process, when we're handling, when consumers are trying to process their claims. There are issues of delays, denials, and sometimes insufficient payouts. And these actually affect consumers very significantly. And this is because most often, consumers do not really fully understand the policy terms and conditions. And also sometimes the insurance industry does not really communicate transparently to consumers to ensure that consumers actually get fair and timely claims resolution. So, I mean, I can give you a lot of examples even from Malaysia, where, you know, consumers usually are unaware when they sign up to policies, insurance policies, that there is a long list of exclusions, you know, in the policy, because these are all not communicated to them through the insurance agents who are usually their first point of contact. So when it comes to then claims, many a times their claims are denied. So even on the instance of medical health insurance, when consumers are asked to pay for the expenses first and then claim later, and this is very rampant in Malaysia, and I would say also maybe in some of the developing countries in the global south. Now, this puts especially vulnerable consumers in a very difficult position, especially low-income households. If they were to go to a private healthcare facility to obtain certain treatments where the amount may be substantial. Also, many a times, the non-claimable aspects of the insurance benefits are not informed to consumers. So we see a lot of these complaints, and that's why, from the consumer movement's point of view, I would say the claims handling or the process is really core in addressing the consumer risk. And what are the ways that you asked, that we can measure this? I would say, of course, looking at indicators such as claims satisfaction, looking at customer service. Many of the insurance companies in the global south here do not really have proper customer service or customer feedback. As I mentioned, usually it's the agents who are their point of connection or communication. And then when it comes to claims, suddenly you can't find the agent and they're not able to have access to how they can actually, make their claims. So customer service is really core in measuring, I would say good consumer outcomes. Also, renewal rates also would indicate that customers are satisfied and they find value in and good experience in their insurance coverage or insurance company. And educational resources, again, availability of educational materials provided to the consumers in making informed decisions about their insurance needs. I think if there is that sort of availability, because what usually you get in many of the developing countries, I would say, especially from Malaysia, it's, once you sign up, that's it. You don't get any further information from the companies. And then also the
Johnny,
ability for the consumers.
Let me just move on, because I just want to hear what Karen has to say in response to that from another perspective here. Sure. Karen, I think an awful lot of what I heard Andrani say was that going into the process, there are concerns both with the information being provided to consumers and to how that information is being conveyed. And then on the flip side, when there is a claim, there are concerns that the claims itself or the claims themselves are not being properly paid, not being properly addressed, and the consumers do not have recourse. From your point of view at the Financial Rights Center, what do you see?
Good morning, everyone. Look, I agree with a lot of what Idrani has said, but I'd like to go back and say from my perspective that I think the biggest risk comes from the product development itself. And that's not to discount any of the things that Idrani has pointed out, because I agree they are all major issues. But the reason I pinpoint product development is because if you have a poor value product that has too many exclusions, for example, then no amount of excellent claims handling or disclosure or complaint handling can actually fix the problem. So I think that we have to start with looking at product development and making sure that the products are actually meeting the needs that consumers have, and also to reduce product complexity. One of the big problems we have here in Australia is that the complex differences between basic home building cover make it almost impossible for consumers to actually select what is the best value product for them, and they tend to look around just on price or on brand loyalty and other things that don't really help. If we had a clear form of standard cover or a couple of levels of cover that everyone understood, it would be so much easier to communicate to consumers what to expect and close that expectation gap, which a lot of consumer dissatisfaction comes from. Having said that, I think the biggest emerging risk was highlighted by the keynote address, and that is clearly climate change. In Australia, in the last 3 years, starting with what we called the Black Summer bushfires and moving through a series of terrible storms and then flooding, particularly in early 2022, there's been enormous pressure on insurance companies. And I know that it's been extremely difficult to respond under those pressures, particularly with COVID-19 in the background. But what we've really seen is a whole lot of cracks in basic processes that I think pre-existed all of those pressures and are now just coming to light. We had a surge in complaints of 50% or more in general insurance at our independent ombudsman service last financial year, and the biggest issue was claims handling. We saw a lot of under-resourcing of both claims handling and complaints handling. We're seeing a lot of poor communication. We see expert reports that are really terrible quality being relied on to denied claims. A lot of those are then overturned at the first stage of dispute resolution, but that is just a waste of everyone's time and leaves a really poor taste in consumers' mouths. So claims handling and investment in claims handling is really important. We have a code of conduct here that has some fantastic provisions in it. I think compliance still needs a lot of work. One of the areas of the code covers identifying and responding to vulnerability, and throughout all of those events we saw cases where, certainly some where insurers have done very well, but some where they've done a very poor job of identifying and responding to vulnerability. And that can be anything from an elderly person who's been cash settled a claim who is in no position to be able to manage the repairs process, for example, or being handed cash in circumstances where they are not able to easily even get out and about in the community, let alone project manage a rebuild, through to things like family violence, where we've had situations where people have had the partner cut off the insurance as a form of financial abuse, partners refusing to claim on insurance when the woman and children have been left behind in the property and are the ones who are going to be left homeless. So it's a whole gamut of stuff that I think really is basic core insurance work, and that's what insurers have to focus on, is getting the basics right. I know we've got a huge amount of challenges ahead of us in terms of dealing with climate change and how we maintain the affordability of insurance, but if we can't even get it right in the basics, where we've got people who have bought policies and for the price that was set and then want to claim on them, then we've got an even bigger problem.
Thank you, Karen.
The other thing I just wanted to mention very quickly was data, and that is, I do know data is presenting a whole lot of opportunities internationally, and Australia is no different. But again, in terms of data, insurers are very good at data when it comes to analysing risk. That's already been flagged this morning, but what we don't see is great use of data in actually making their delivery on their products work well. So in terms of being able to provide consumers with their own data, in terms of being able to make sure that consumers are not having illusory cover, so buying products that they're not actually entitled to claim on, in terms of analysing their own claims and complaints data, we're seeing a lot of underperformance, I think, and even being able to deliver on their own pricing promises. The Australian regulator actually took a series of actions over the past 18 months, resulting in millions of dollars having to be returned to consumers because insurers were not basically tracking their own price promises and making sure they delivered.
Let me turn to, and Shanichi, I hate to put you on the spot, but you're with an insurer, but you also have a background in supervision. You were with the IAIS during some of the more interesting recent times in the insurance industry. You've worked in various markets, including the U.S. How do you respond to what you've heard?
Thank you, Commissioner. First of all, it's my great honor to be here. I used to work within the IAIS Secretariat, so I've been a regular participant to this conference, but this is my first time to be on the podium. Concerning the question from the Commissioner, I see the next pandemic as a key emerging risk. As we have learned a lot from COVID-19, I'd like to share our learnings. The biggest challenge and risks we see in the pandemic is claims handling. Before the pandemic, customers have submitted their diagnostic result on paper basis, and the insurance administrative operations on sensitive information was handled in the office. So as we have experienced, the COVID-19 restrictions on commuting to work have prevented the timely payment of important insurance benefits. So we have expanded our scope of our online filing system and also developed a remote payment assessment system under security controls. And thus we were able to process the increasing number of the payment requests without delay. Our effort in improving our administrative infrastructure through our response to the COVID-19 was positively received by the consumers. Also, regulators acknowledged the effort taken by the insurers. The next risk after claims handling is product and pricing. Under COVID-19, several insurers have developed the product specifically for the COVID-19. However, I think that the design and pricing the product has been challenging because the infectiousness and symptoms of the new types of disease fluctuate significantly in the short period of time. And we've been monitoring customer outcomes based on our annual customer satisfaction survey. And the level of satisfaction has been on an upward trend for the past 10 years. And this upward trend has not generally changed even under COVID-19. Thank you.
Thank you. And Mark, I'm going to come to you in a second. But first, if I could ask if the results of the Slido poll could be put up on the screen so we can see what the audience thinks. And there clearly is a convergence of opinion here. You can see claims handling has a plurality. It's at the top. Sales is next. And product development is right after that. So I do think that we all agree there are issues where the consumer, or there are places where the consumers are put at risk, and issues that throughout the entire cycle for us as regulators, for the companies, for consumer representatives, there are areas that we need to address. So let me ask you, Mark, as a supervisor, how do you look at conduct, market conduct, conduct of business issues, whatever you want to call it, but how do you look at those before there are negative consumer outcomes? How do you look at trends? How do you try to address it to proactively protect consumers?
Well, it's complex because it can happen at any part of the whole insurance product cycle. And I think that's what that reflected. Product design is the very start. Claims handling is generally at the end, and it can happen anywhere through there. And there are different risks at different parts of that product life cycle to different consumers with different products. So it also depends. More compulsory products, it's not in product design. So it's really important as a supervisor to be situational and to be approaching it on a proportional basis in the context of the marketplace, and making sure you're taking into account the evidence and looking at it on a risk basis. And a lot of what we do increasingly as supervisors is using data and analytics to do that. And you can identify really interesting trends, and I mentioned those market conduct indicators, but simple things like lapse rates for products, looking at the number of disputes that happen, how long it takes to settle claims versus benchmarks which are going on in the industry, how often litigation occurs, and what type of issues arise from all of that. But when I take it up a level, so I think about a few bigger themes. First of all, it is about understanding business processes, and particularly where there's change in marketplace, there's the potential for consumers to be adversely affected by that change. One of the big changes in many of the marketplaces for life insurance has been going from a direct agent model to an indirect intermediary where the sales agent is no longer as closely connected to the company. And that actually results in new issues for consumers. And so, for example, you need to identify that by actually doing the drill downs, consulting with consumers, consulting with insurers, getting the information about what that marketplace change means. So you're going from often very highly trained, dedicated agents, well aligned with the interests of the insurers, to agents who potentially sell for many different companies, may be part-time, may have other business interests, may really just be more financially motivated rather than thinking of it as a passion of actually servicing the insurance clientele that they have. We also find, as a supervisor, again, taking it up, it's about aligning yourself, and we're very pleased to see so many of the insurers here and the industry associations aligning yourself with those who prize the reputation and the service mentality that the best insurers and intermediaries bring to that marketplace. And by working with them, they will help you understand what the changes are and what the practices are that they see the race to the bottom and they want to see standards maintained. And we also, I think, increasingly as supervisors, leverage ourselves off of the fact that the directors and senior managers, they realize their companies have a mission to serve their customers. And leveraging off their fiduciary obligations, the fact that they put in 3 lines of defense with risk managers, internal audit, making sure that those compliance and control processes are aligned with regulatory objectives and are helping to achieve those. And where they don't, then sometimes you, of course, have to enforce, but that should never be your first choice. The final thing is, and although disclosure is an important tool, it tends to be a very imperfect tool, but educating consumers and trying to make sure that they are aware where there are marketplace harms. So, it's not just about making sure that they can get policy terms, but they understand what practices, what to look for if the first time they're buying life insurance or they're, thinking of getting insurance around a mortgage for the first time, having that basic information in a way that they can easily consume.
Thanks, Mark. You mentioned educating the consumer. So let's put up the next polling question, because I think this leads right into it. Because what we want to find out is how best to support consumer outcomes. We want to find out how do we get consumers to understand the products they buy. So you've got 4 choices on here. Please go to Slido, fill those in, pick, and you'll get 1 choice. Pick whichever one you think is most important, and we'll get the results shortly. Let me start off with Karen for this round. And Karen, most regulatory regimes are based on disclosure, or at least there is the feeling that disclosure is important, even if it's not necessarily all there has to be. Now, I'm going to speak for myself here, and if you've ever gone onto a website and it gives you that whole long list of things before you can go on, and you got to click accept or reject, and you click accept. I've never actually read one of those, and most people never actually read their insurance policies either, and that's just human nature. So the question is, what can we do to help consumers understand the products they're buying? Does technology help? How can we help consumers, how can we help ensure that when a consumer puts his or their money down, that the product they're getting is a product they think they are getting? Karen?
Look, I'm going to sound like a broken record here, because I have to say having simple products that actually do the job people expect them to do goes a hell of a long way here. There's a lot less to educate people about if the products are not as complex in the first place. So I think that some of the kind of developing laws around things like design and distribution obligations, etc., have a big role to play here. I would agree about the ineffectiveness of disclosure. We did some research at Monash University a couple of years ago where we got students, were reasonably intelligent people, and presented them with 3 fairly simple policies. We reduced them to about 20 pages rather than the 80 to 100 of product disclosure statements that are sometimes on the market. We made one of them really obviously bad, one really obviously good, and one mediocre, and asked them, to consider a scenario and choose insurance. And some of them still chose the worst policy in that sort of controlled exercise. So I think the reality is that, as you said, people often don't read them, but even if they do, they're really, really very difficult to understand. And to both understand what you're reading, predict risk, and apply that information to how it might play out for you is really, really difficult. So disclosure has got to be part of the equation, but we really can't stop there. So simple products, much better disclosure. A lot of consumers are very time poor. A lot of them may be reading a policy in a language that is not their first or even second language. A lot of people need verbal information rather than just written, literal and graphics and things like that. So there's a whole lot of work that could be done in that area as well. You mentioned digital opportunities. Certainly there would seem to be capacity to use digital opportunities effectively in this space, but I have to say our experience of that has not been great. In fact, it's almost the opposite. As insurers have gone from having shop fronts through having telephone centres and now to doing a lot of their business online, we're actually seeing less consumer engagement with the content of their policies and more misunderstandings about what's actually covered. And I think that's partly through the phenomena you just described, of people just clicking through things rather than reading. And you get to a thing that might ask you about an important disclosure statement, such as a criminal record. And if you click the wrong answer, quite often it will simply say, oh, you'll have to ring this later because that's a little bit too complex for this process. And the person just goes back and then re-clicks the answer that actually gets them to move to the next step, which is a really undesirable outcome. So I think there needs to be a lot of improvement in actually leveraging the digital opportunities to make a real difference.
Indrani, anything that you would add to that to help support consumer understanding of insurance products?
Yes, I would like to also reiterate that, especially here in the global south and particularly in Malaysia, I mean, we did a simple survey and it showed that 70% of the policyholders did not know the terms and conditions of their policy. So I think you can see a lot of examples where the policyholders are unaware of their rights. And again, this is where then they don't make an informed decision, and it reduces. I would say it increases the misunderstandings. I like the examples that Karen had shared, and some of the examples from our other fellow consumer organizations to kind of make it much more simplified for consumers, where we are asking insurance companies to, at least in the front page, kind of highlight a summary of, what is the coverage, what are some of the exclusions that's there. It kind of just makes it easier for the consumers to read. And also, as was mentioned by Karen, some of the graphics, like for example, some of the consumer groups in Asia here, they have come up with this traffic light labeling, trying to just encourage consumers to kind of give them a little bit of kind of guidance that, okay, if there are certain indicators and if this insurance policy doesn't kind of cover in terms of certain health and so on, it could be an amber or it could be maybe red. And that kind of guides the consumers, okay, I'm going to kind of, these three reds here in terms of the three indicators, and maybe I would not kind of want to find that. In terms of technology, as was mentioned, there are some potentials. I mean, now everything is being gamified, and that's another way of trying to educate consumers by giving them that gamifying learning experience. Of course, you've got the chatbots and so on, but again, that's very limited because when you talk about vulnerable consumers, the aging population, the indigenous people, they're not able to use that kind of technology. But trying to maybe see how at the remote areas you could kind of have simulators where people could actually go through that kind of simulations to find out if I were to purchase this particular insurance policy on medical health, what would be the limitations and so on. So there are some potentials, but I think there are also certain limitations in using technology. Thank you.
Shinichi, again, you're the company representative, the industry representative here. And as I listened, I heard some common themes: product design, simple products, summaries of exclusions and coverage so people have an easy, clear understanding of what they're getting, ease of use in general, decision architecture, especially as we move more towards online products. Now, you mentioned in your earlier comments that your satisfaction metrics have been increasing steadily over the years. What steps do you take in your product cycle to help consumers better understand their products and to avoid problems further down the road?
Thank you. Let me share one of our challenges in Japan, a super aging society. Japanese insurers have been facing challenges to ensure the customers continue to understand the term and conditions even after a certain period of time, because the possibility that their cognitive abilities may decline with aging. To address these issues, we have introduced a system that allows family members of policyholder to perform procedures on behalf of the policyholder when policyholders get dementia. In addition, as Japan's population has been aging, some customers have requested that their family members also be present when buying insurance because of the possibility that cognitive abilities may decline in the future. So given these requests, we have introduced a family presence system that is designed to ensure that the family members also be aware of the terms and conditions at the contracting stage in preparation for the future procedural support. Such infrastructure was originally designed for the elderly and age-related dementia in mind, but these efforts aim to provide peace of mind to a wider range of people, including the family members and the younger generation. As was mentioned in my response at the round one, the effect of these efforts are monitored by the customer satisfaction surveys, and our initiative have contributed to the upward trend in the overall level of satisfaction. Thank you.
Thank you. And Mark, let me turn it over to you. Understanding is one thing. Are there any other issues that you as a supervisor are seeing as you look at the consumers and how consumers are interfacing with insurance companies at this point?
Yeah, sure, Andrew. Well, education and disclosure, they are important, but they do have their limits. And generally, there's two big issues. One is the complexity, and we've heard about that from Karen and Indrani. And it's just difficult for them to understand it. And then there's also a collective action problem, which is that even when things are in the interest of a consumer to fight for it or to object or to investigate, their own individual benefit from doing so is not worth the effort. And so that you basically have to bundle it together. So supervisors have to basically keep both of these in mind. So it's our ability to look into and across markets. We have the professionalism, the expertise. We have people with professional backgrounds, insurance industry training. So we have to effectively work to level the playing field by identifying the issues that are of concerns to consumers, but that they may not be equipped to identify or understand, or economically aren't incented to take action on. And I'll give a few examples of them. So, for example, one of the things I was focused on is incentives. Incentives tend to drive behaviors, and where you have unusually high incentives and you combine that with something like high lapse rates or relatively low value insurance products, so the payouts aren't necessarily a large proportion, then that is actually a trigger for you as an insurer to basically say what's going on there. Another example currently is the use of data and analytics, and comes up in many different ways, but a couple I'll highlight. So often data now is actually being used in underwriting processes in a way that's not transparent, and that can actually be very good because there's better insights into risks, but can also be used in ways that are not helpful. And then you can also then have algorithms which are essentially screening consumers so that there's essentially hidden, non-transparent biases put into the insurance process, and consumers will not have the ability to understand how that data is being used and how those algorithms are operating. Supervisors were called on to do that. Another area is something the way insurance actually goes to market and taking into account behavior of consumers. So some of this is loyalty penalties, essentially where on renewal, you get a worse price than someone with exactly the same risk profile who's a new customer, because they're trying to attract new customers, but recognizing that people tend to renew just out of ease, comfort, convenience, and they charge you more. And so in some jurisdictions, there's actually legal changes to deal with that. Other jurisdictions, it's not a matter of law, but it's a matter of educating consumers. Final thing is around bundling of insurance, and so how the actual purchase decision is made. And that could be at digital point of sale, where consumers are essentially incented with default options, or basically almost a pressure tactics. This is only available while you're booking your ticket if you want to get the travel insurance or the protection insurance at the time. But it's also at things like major life decisions like mortgages, where lenders are actually selling life insurance, which actually protects the lender, even though you're paying for it. And that individual might get better value, certainly for their family would get better value if they actually bought term life insurance rather than buying the mortgage insurance that's actually protecting the lender. So when you step back from all these things, the way I think about it is markets have imperfections. And so supervisors have to look at where those imperfections are occurring. And those could be imperfections because they're taking advantage. There's sometimes community or trust abuse cases where sales are occurring. So that's obviously a market imperfection that needs to be caught. But some of those other examples I gave, Andrew, are much more insidious and difficult because you have to get into the complexity of the insurance product life cycle.
And let me just ask you a quick follow-up, if you got a couple seconds to answer this one, because you'd mentioned algorithms, for instance, where there could be a hidden bias, where some consumers may be screened out at some point in the process. Do you, as a supervisor, feel that supervisors are properly resourced? Do we have the talent, the skill sets, and the money to be able to address this vastly increased use of technology, of more complex technologies?
Yeah, that's a great question. So I was a bank regulator looking at bank models, and I was actually responsible for a major financial institutions modeling as well at one point. And I'm not really a quant guy, but I do understand how models work. And I will say it is a really tough thing for insurance supervisors to do that. Some larger ones, or by combining through places like the IAIS, we can leverage ourselves. I think one of the things we can do is I go back to the companies that are the allies and using their own internal processes. I think that if you talk to the people who are in the model risk review departments and they actually have the right incentives and processes and have the right second line of control, oversight by management and boards, that you can also get a long way to it even if you don't have the resources yourself as a supervisor. And you can also buy in those resources too as a supervisor. There's some great firms out there.
Thanks, Mark. Can we bring up the answers to the last polling question? More consumer education, increased financial capability. That's the runaway winner for the one thing that the audience thinks, the one action that will best support better consumer outcomes for those buying insurance products. And now I'm going to just have you flip. I think we have about 15 minutes left as we come to the last stretch of our panel. Let's put up the final set of polling questions. I do think we have one more set here. And the question is, what should insurers prioritize changing to deliver better outcomes for diverse consumers? You're going to see a bunch of options when you go on, and we're going to ask you to rank them. And while you do that, let me switch the focus. As I mentioned early on, we have this panel. This panel is diverse in so many ways, diverse in terms of geography, in terms of responsibilities. And I have no idea what that was, but the stage shook a little bit. But I'm sure we have insurance for that, don't worry. But I'm going to start with you, Mark, because diversity, equity, and inclusion, supervisors, regulators have not always, and some still don't, consider issues of diversity and the way conduct of business is supervised. Can you tell us a little from your perspective about how this is changing? And also, what do you expect? What are the expectations on insurers as your own drivers change?
Yeah, thanks, Andrew. So there was a great paper put out by the Governance and Market Conduct Working Group on diversity, equity, and inclusion. And I think the IAIS realized that, and I think we're at a regulatory forefront here where we're looking at how consumers are treated when they're not part of the dominant or normative or main target group that was intended by the insurer as their sort of, model customer that they're focusing on. And it is about making sure that there are fair outcomes for these non-normative group customers. And these could be vulnerable consumers, socioeconomically disadvantaged, consumers with disabilities, racialized, new immigrants. There's a long list of who can be diverse consumers. And one of the interesting things we found is that even some of the most advantaged people in society, given situations of life events or natural catastrophe, can also be vulnerable consumers. And some of the things you heard about claims handling, for example, very true. It doesn't matter who you are, you will be vulnerable at that point in your life. And so we want to think about how we can level the playing field and get the right fair treatment. So it's still about achieving fair treatment for these diverse consumers. And supervisors we looked around the world and we basically got many examples of how, in fact, even though a model didn't exist for protecting diverse consumers, that in fact ICP 19 was well used in many jurisdictions, generally after the fact, to try and get the right outcome for those consumers, but also increasingly in a proactive or preemptive way where issues were identified and supervisors and regulators were getting ahead of the curve and trying to make sure they're protecting them. Now, Andrew, your question about what does this mean for insurers? And so obviously they're trying to run a business. They do create these normative customer models, and they're the ones that they're really targeting and they're thinking about through their full product design, sales, and claims handling processes. And it means that for these diverse consumers, they have to change what they're doing. And so it could be about helping technologically less enabled consumers to be able to interact, assisting customers with language or cognitive issues, tailoring claims processes during times of crisis, training agents to identify where something in their standard sales practices will not work and they have to recognize and adjust to diversity. Could be in the design or underwriting processes to make sure that they're not based on stereotypes or faulty assumptions or outmoded bits of information. And so this supervisory focus at all is about ICP 19 on the fair treatment of customers. But we have to also recognize that this has to be taken within local context, laws, customs, the state of the market development. And you'll have to apply that to basically say in your jurisdiction, who will you consider to be a diverse customer that is deserving of these fair outcomes? And also, what is the reasonable accommodation that an insurer or intermediary should provide? And this is not about insurers abandoning risk analysis to, not have risk-based pricing, not to have risk, because you get risk mitigation through risk-based pricing. And it's not about cross-subsidization of diverse consumers. It's about finding the right balance that's appropriate in the marketplace where that insurer and that supervisor operate. And I think overall, Andrew, this will mean that there's a new way of thinking about how you get the fair treatment of a customer when that customer is diverse.
Let me ask the consumer representatives here. Let me start with you, Indrani. Let me ask you to give some advice. We've got lots of insurance company representatives in the audience. How should insurers be thinking about the diversity of their customer base? What can they do to help lead to better outcomes? And I said better outcomes, but how would you define a good outcome for a diverse consumer base?
Yeah, I would say, Andrew, as what was mentioned by Mark, I think it has to be a very inclusive product design. That's really very important. I've known of cases, the consumer associations, we also handle a lot of the complaints from consumers. And we've received many complaints where in terms of those people with disability, they can afford to actually purchase insurance, but none of the insurance companies are willing to underwrite that risk. They're not willing, if that person is with certain disability. Both parents are doctors, they can afford, but because of the, medical insurance, they would like to kind of cover their child. But none of the companies are willing to take that. So I would say that companies really need to ask these questions. So are they being representative of the groups of vulnerable consumers, inclusive of the aging population? Sometimes most of the insurance coverage is till 65, and then after that there's you have to take another insurance, but by that time you're not working. So I think these are the areas that companies need to consider. Also in terms of affordability, many of the socioeconomic groups, especially of those of low income, how can the company address those consumers who would also like to kind of take up insurance? And not only that, I would also say whether the company itself, whether it prioritizes diversity in its workforce and leadership, because when there's a diverse team within the company itself, they can better understand and address, I think, the varied needs of the consumers. And this would be in line with what the keynote speaker spoke about, the ESG principles. And also then I would say on a final point about community engagement. How often does the company actually go out and engages with these diverse communities, understanding the specific needs, and then tailoring these kind of products accordingly. Because what we see sometimes is a kind of a one-size-fits-all, and a lot of those people who are vulnerable, then like the indigenous people, as was mentioned, the immigrants, housewives, people with disability, they don't fall within any of these standard products. So I think this is where some of the new issues that the companies would need to ask themselves in order to have good outcomes, that would be community engagement, representation, affordability, and inclusive product design. Thank you.
Thanks, Indrani. Karen, what would you add to that?
Look, I agree with everything Indrani said. Excuse me. One thing I'd like to emphasise is that when we're talking about reaching diverse customers, communities, I think it's really important to emphasise we're not just looking to sell to those people. We've seen so many really awful situations where people have actually been missold really poor value products. I mean, the biggest example I'm aware of in Australia was 30 years of insurance sold by what was known as the Aboriginal Community Benefit Fund to First Nations communities. It was not Aboriginal and it was not for their benefit. It was a for-profit exercise, and it operated like insurance. You stopped paying, you fell out of the system. So it was very misleading, very widespread, very successful in reaching the community, but not very successful in servicing the community. And we've seen similar things with funeral insurance more generally, with accident insurance, often telesales. I think Mark mentioned earlier about following the money and commissions. I've spoken to people with intellectual disabilities and cognitive problems who have anywhere between 3 and 7 life or funeral insurance policies that have been sold to them over the phone, and the money's being extracted from their bank account. So when we talk about servicing diverse communities, that's not what we're talking about. Putting that to one side, I do think a lot of work can be done in making sure that insurance services diverse communities well, and I again include everyone from people who may be from refugees from another country or recent migrants, people who don't speak the main language of the nation and market that they're in, through to people who may have lived there all their lives but are now challenged through age or disability. And the point I'd like to make is that when you make products and processes work for those people, you make them better for everybody. It's about making sure that systems respond well. It's not always about necessarily having to, be able to predict or telepathically interpret the situation someone's in. A few simple screening questions can help narrow things down. And we also see examples of people who actually say to someone on the phone at the insurers during the claims process something that's highly indicative of either a mental health issue, a disability, or some other form of dependency, and it's simply not written down and recorded and taken into account in the process. So I think there's some really basic things that could be done that would improve outcomes across the board.
Thanks, Karen. And Shinichi, I'm going to turn to you now, because we've heard from Karen a number of examples of members of diverse communities, some of whom have not always been treated well. And we heard from Indrani, there were a couple of items that she mentioned that I wanted to ask you about. She said there was a need to ask people questions, and how are companies engaging with these diverse communities. So let me ask you at your company, what diversity considerations do you have, and how do you engage? How do you incorporate these into the processes at your company?
Thank you. Meiji Yasuda Life is developing the easy access to insurance for everyone to achieve financial inclusion, so that people with diverse characteristics can buy and continue the insurance policy without inconvenience. This initiative mainly targets the elderly and people with disabilities, LGBTQ, and people from overseas. As indicated in the G20 Fukuoka policy priorities, Japan places emphasis on the elderly and age-related disabilities. So I'd like to introduce the Meiji Yasuda's initiative targeting people with disabilities. In Japan, 1 in 9 people is worried about hearing, and the rate rises up to about 40% especially among those over the age of 75. And in particular, elderly people with hearing problem tend to avoid using telephones, and there's a risk of social isolation, which can lead to dementia. In order to prevent such social isolation, measures that developed the Sound Arch, a telephone voice clarifier in cooperation with the startup as an initiative for financial inclusion. Here, let me unveil the Sound Arch. This small box is the Sound Arch. This is used by connecting to the telephone. And this Sound Arch utilizes this internationally patented technology that enables smooth communication with people who are hard of hearing. Measures that has installed the 100 set of this Sound Arch in our call centers and to provide telephone support for the elderly and the hard of hearing people. In a study we conducted to verify the effectiveness, about 80% of hard of hearing customers said that they could communicate more easily. This confirms the usefulness of Sound Arch. The Sound Arch, I believe, changed the world, not only for the people with hearing problem, but also the people around them. While I understand our effort to address the issue of hearing loss, Measures is also taking a number of other financial inclusion initiatives. We believe that promoting financial inclusion initiatives contribute to improving convenience, not only for the specific group of people, but also for all groups of customers. This is a point to which I'd like to draw your attention. Thank you.
Thank you. And can we pull up the results of the poll? Let's see what the audience thinks. Customer communications, that is, we were just hearing that.
Very good.
What should insurers prioritize? We've seen the list, and interestingly, product pricing, we presume that product pricing is more or less accurate, is at the bottom of the list. But we can see a number of suggestions: product design, sales methods, product information. You see what people think is important in order to be able to reach diverse communities that may not necessarily be able to communicate in the same way as others. We don't all have intermediaries that can help us. I've got a 93-year-old mother, and she brings me the stuff to go through. Can't all do that. So I think it's incumbent on us as regulators, on companies, as consumer representatives, to ensure that consumers have the information they need, all the information they need, when they need it, when they're making a decision, and on the other side of the table, when they have a claim. Unfortunately, that is all the time we have. We could have just kept going on this, but I want to thank Indrani, Karen, Mark, and Shinichi. You've been a great panel. I hope you found this helpful. Please join me in thanking the panelists.
Thank you. And if you have a chance to join the consumer roundtables, which are coming up, we're going to be looking and we'll continue the discussion. You have your chance to answer questions there and give us input. Look forward to it.